Hope is not a strategy, you guys. It is a recipe for disaster because action is the only thing that's going to help you through this. Inflation versus recession. Now, this is important because right now we're in an inflation teetering on the edge of a recession. Now, I wanted to share this chart with you guys, and here's what it is. 750 CEOs as well as their C-suite executives were queried through C-suite Outlook. Okay, this is a special mid-year survey, and the question was this: when do you expect a recession in your region of major operations, if at all? Okay. Now the CEOs, they believe that 31% said we will be in a recession in late 2022, 17.8% said it would be in 2023, and 4.8% said 2024. Now 19.1% says we do not expect a recession within the next 2 to 3 years. So who's right? Well, go to the CFOs of these same companies, and you can see that 35.9% of CFOs said we do not expect a recession within the next 2 or 3 years. Then you go to their other people within the company, other C-suite executives, and here you see 26% do not expect recession. Now, what is a recession? A recession is 2 consecutive quarters of negative GDP growth, which means we have to dip down below 0 to hit negative, okay? Now, the outlook for recession or for GDP growth is that we will see in 2022 or 2023 1.3% growth, and in 2024 it's predicted that we'll see 0.08% growth. Those are not negative numbers, okay? Now, how the Fed plays this is one thing, but how we as the consumer react to what the Feds do is another thing. Do we continue to buy? Do we continue to invest? Do we continue to grow and scale our businesses as the economy is, going this direction? Well, for the scrappers, they're going to be looking for new lines of business, new opportunities, new ways to profit in this changing market environment. Now, one of my favorite quotes is this: there's no such thing as a bad market, just bad marketing. And so if you are a business owner watching this right now and you are experiencing a slowdown in your business and you are looking at your week over week, month over month, quarter over quarter numbers and you are seeing a decline, you should not be freaking out. What you should be doing is looking at, okay, what can I do with the resources I have within my organization, from my employees to my list, to my outlets, to my marketing? How can I pivot? How can I change those things to take advantage of the new coming market? Now, for us as a company, I can tell you that we have pivoted pretty aggressively, and we are no longer targeting fix and flip as our predominant role over the next 24 months. We have gone all in on property management, buying, cash flow, and we are now going into the property management business where we are taking on other investors' assets to manage their properties for rental, because property management is not everybody's game. And we know that. And there's a lot of investors who are now upside down. Because rates are rising, they can't sell for what they owe because they bought in 2020 or 2021. They paid $440, and all they can get right now is $241, but they still owe $440. So we're going to see a lot of short sales that are occurring, but because a lot of those investors or buyers purchased those homes in 2021 when rates were at 3%, they can still cash flow. So rather than taking a hit on their credit and going on an all-out short sale, they could just rent the property out to weather the storm, wait for rates to drop, and then sell it into a new selling environment. Okay, so we just have to think through what's happening and figure out how we can profit as a result of the change. What you cannot do is just sit there and hope that it gets better. Hope is not a strategy, you guys. It is a recipe for disaster because action is the only thing that's going to help you through this.